is an asset, so this is credit balance or debit balance. So asset normal balance is debit balance, right? So during the month, 7,000 purchase, here we go. 7,000. And at the end, how much left? 3,000. So it means how much is the reduction? The reduction is, so debit side is how much larger than the credit side? So you can say that 7,000 plus 5,000. Answer is 12,000. And from 12,000 minus 3,000, answer is 9,000, right? So it means 9,000 worth of supplies has been consumed. Entry would be consumed is your expense, and the opposite account would be supplies account, which is asset account. So expense increase, debit. Supply decrease, credit. Entry would be supply expense to supplies. So many students, they are confused why we are writing two supplies. So remember, these are not two same account, okay? So this is the name of the account, supplies expense. Normally it is expense, but since we want to know that this 9,000 belongs to which account, expense to which account, so it is supplies, so that we know that this expense is coming from supplies to segregate the expense, right? So supply expense is a different account, supplies is a different account. Supplies is balance sheet account, and supply expense is income statement account. Understand? And what is the ending balance in supplies? Question already mentioned, it is 3,000, right? Understand everybody? Florian, Kathleen, Dijodi, Fabian,
Understand now.
Florian, Lota, Ploy, Woseong, you already sent it. Good one. Okay. Now depreciation. So depreciation accounts, they are also adjusting account. We need to have adjusted entry, because at the end of the period or at the end of the interim period, 1 month, 6 months, 3 months, whatsoever, so we need to see that how much wear and tear or how much expense over the useful life of the asset we are going to record, right? So I'm going to skip that one because we already talked about, depreciation and the plant assets a number of times. So let's just talk about its illustration. So suppose that on June 3, Friday Auto Service purchased equipment on account 24,000. What is the entry? You purchased an equipment on account. What is the journal entry? Anyone? Ploy?
Is it cash and accounts receivable?
What is the entry?
Equipment. Equipment expense on credit for 24,000, and then yeah.
So remember, equipment is an expense. Ploy?
No, sorry. It's just equipment.
Yes. Why? Because its life is for more than 1 year. Computer, ACs, right? Printing machines, we call this equipment. Okay. So on account means equipment to accounts payable. Ploy. The entry would be equipment to accounts payable. Right? Now, let's talk about its depreciation, adjusting entry. So, Friday's equipment will remain useful for 5 years. and then will be worthless, which means it will be sold on zero price. So one way to compute the depreciation is that you divide it by the number of useful life. So 24,000 divided by 5, we call this straight line method. So we'll talk about this in depreciation chapters. Just you allocate the cost of equipment over its useful life. So 24,000 divided by 5. Answer would be 4,800, right? So this 4,800 per year, and if you use it for 1 month, then 4,800, come on, 4,800 divided by 12, right? So let's just talk about this. Yeah, monthly is 400, right? And now, what is the depreciation of June? It means per month depreciation is 400, right? When per month depreciation is 400, then what is the entry? Expense increase, debit. The depreciation expense to the contra account for depreciation is accumulated depreciation. We don't charge it just to depreciation expense to equipment. No. The reason is that because there is going to be accumulated depreciation on building, building, plant, furniture, equipment. So we cannot just, charge to its on account like we did in supplies expense to supplies. So many students say that, okay, depreciation expense to equipment. There is a logic here, and that entry would be right. But we create a separate account. We call this contra account or opposite account of the asset account, which is equipment. We create its contra or opposite account. We call this accumulated depreciation. Why? Because we want to know that in accumulation, that how much depreciation is we have accumulated during its useful years. After 1 year, 2 years, 3 years, how much this asset we have been, we have used during, since its purchase, right? So that's why we create a contra account, accumulated depreciation. So if asset increase is debit, contra account increase its credit, right? So depreciation increase, it's an asset increase debit. On the other hand, the accumulated depreciation increase this contra account of asset, it is credit. So entry is complete. And how we are going to pronounce from debit to credit, which is depreciation expense to accumulated depreciation. That's how we write it down. So this is just a specialized case of a distinct entry of depreciation, because in depreciation we set up accumulated depreciation account. Okay, just remember that. So why we use accumulated depreciation? It shows sum of all the depreciation expense. Like we want to know that how much is this basically plant, machinery, equipment, how much this have been used, and how much balance left until its total useful life. So this is a contra account, right? So asset account normal balance is debit, but its balance is opposite one, credit, right? So there are two distinguishing characteristics of contra account. That is, it has always a companion account. So you cannot just write it down, accumulated as, for example, accumulated prepaid expense. No. Accumulated depreciation belongs to depreciation, right? So it has a companion account. Its companion account is depreciation account. So its normal balance is opposite of the companion account. So what is the book value? Book value means assets value minus its depreciation, right? So here we have, it means the value of that equipment is now 41,600, right? In our books, that's why we call this book value, right, guys? So many students, they ask me whether the book value is basically the sale value. No. Why? Because in the market value can be above the 41,600 or can be down from the 41,600, right? So that doesn't mean that we are selling it at 41,600. No, it is because we have, used this equipment worth of 400 this month, right? Because we have allocated this 24,000 on 5 year span of period, right? And per month, per year is 4,800, and when you divide it by 12, answer is 400. So in per month, we are using this equipment 400, means 400 worth of value we already consumed in 1 month. Left is yet to be consumed. This is how we are. So that doesn't mean the actual expense. Depreciation is non-cash expense. That doesn't mean that we are creating a separate account in which we put 400 every month. No, this is just a value that is, came up with some formula, like, how we calculate depreciation. There are 2 or 3 methods of calculating the depreciation. We will learn in coming lectures. So that is just a figure that is coming out about its wear and tear. It means it's already been used 400, and left 41,600 is left. This 23,600 is left to be used in coming months. That's it. So you see here. So now question is, what will be the book value of Friday's equipment at the end of the July? So at the end of the July, this would become 800, right? 400 also is going to be consumed. So book value is going to be, here 800. Sorry, cannot write. This 400 become like 800. Let me just clear this one. Here it's going to be 800, and this will be becoming 23,200. 41 total assets will be 41,200. Okay, so this is basically Starbucks. How the Starbucks reports its, property, plant, and assets. So you see all the values: store equipment, leasehold improvement, buildings, land, whatsoever, and at the end they list all the cumulative depreciation, so that they know that, from the value of its total assets,